say. This is the last basic concept that you need to understand in order to calculate the domestic income and the national income. The concept is NFIA or net factor income from abroad. What is this net factor income from abroad? In a four-sector model, you know that with the households, the firms, government, the fourth sector is the external sector, right? So, as part of the external sector, you need to understand what is the factor income from rest of the world and factor income to rest of the world. So, factor income from rest of the world refers to the income that is earned by normal residents from rest of the world as part of wage, salary, interest and profit. I repeat, factor income from rest of the world refers to income earned by normal residents from rest of the world in the form of wages and salaries and interest and profit. So, if the foreigners are going to be providing same such factor services from within the domestic territory, then that would make up the factor income that is made by the normal residents of other countries. Or in other words, I am talking about the factor income to rest of the world. Factor income to rest of the world refers to factor income paid to normal residents of the other countries because they have provided factor services within the domestic territory of the nation. So these two concepts of factor income from rest of the world and factor income to rest of the world, they need to be treated to arrive at the domestic income or to arrive at the national income. Domestic income plus NFIA will give you national income, and NFIA is nothing but factor income from abroad minus factor income to abroad. So what are the components of this NFIA? NFIA composes of the net compensation of employees. The compensation of employees, that nothing but the wage and salary that's offered to laborers. So you have understood that there is factor income from rest of the world, factor income is also paid to rest of the world, and difference between the two is what is NFIA. Similarly, net compensation of employees will be income received from abroad by the normal residents in form of wage and salary minus income paid to rest of the world to the normal residents of the other countries for same such services. So that is net compensation of employees. What is net? The second component is net income from property and entrepreneurship. That would be the rate of interest, rent and dividends. So, if the population of a nation, they are going to own property abroad, if they are going to have production units abroad, then they become eligible to receive factor income in the form of rent and interest and dividends from abroad. Similarly, normal residents of other countries, when they own such income and property in the domestic territory, same such income will have to be paid to them, and that would be the income to abroad to such factors. So, net income from property and entrepreneurship will be the difference between the income from property and entrepreneurship from less income from property and entrepreneurship paid to the normal residents of other countries. So that's the second component. The third component is that of net retained earnings. So what is this retained earnings? Again, this term you are aware of from class 11 business studies. Production units, when they make ample profit, the first payment that they have to make is the corporate profit tax. That's a mandatory payment. If they have more profit even after paying this mandatory payment, then that would be declared as additional profit to the shareholders. Let's assume they still have some more profit left. So they would set aside or retain some amount of their profit for contingencies, for future use, for expansion purposes and so on, or plow back this part of the profit into business in the future. So that is the retained earning. So this could be a major sum for huge corporations. So the net retained earning, it refers to the retained earning from rest of the world minus retained earning to rest of the world. So that's a third component which makes up your NFIA. So NFIA will be the summation of net compensation of employees plus net income from property and entrepreneurship plus net retained earnings. So that would make up NFIA. So moving back to the concept of domestic income and national income. Domestic income plus NFIA will give you the national income. What does that mean? Domestic income is the income that is made from within the domestic territory by the normal residents. Plus NFIA will be the income that is made by the normal residents from rest of the world minus same such payment that is made to the normal residents of other nations. So that would be the income that is made by the normal residents from within the domestic territory and from abroad. So that is the national product. Yeah. So with this we come to the end of the last concept. Thank you.